YouTubers, Mike Martin's here. Mike Martin's channel. Alarm bells ring over housing debt. Debts, housing over rising bells. Alarm. What the heck is going on? I've been talking about this for the last 10 years. I remember watching the housing debt in Australia going up around 20, after the Olympics in 2010, 2011, watching housing going up. Same thing with the UK, same thing with that. How are the locals going to support this? 2006, I'm starting to see 2004, 2005, Vancouver starts going nuts and starts to rally in the housing market, and everyone's going to pop. It's going to pop. It's going to pop. It never popped. It never popped. It never popped. And guess what? It still never popped. So it's declining right now. Everything's declining. There's an oversupply on the market. So there's a glut of homes. But what's going on, guys, realistically? Anytime a house goes over 4 times your annual income rate, you deem a house broke or house poor. In Australia, it's like some cities are 16 times over the amount. And people are like, yeah, Mike, but that's in Sydney and the good parts. No, you see, in Beverly Hills, it's not Beverly Hills all over the place there. There's a lot of areas, even 40 minutes outside of the downtown Sydney area, that's still way 12 times, 11 times the annual income. Same thing in Toronto. Toronto is 17 times the annual income, so you would have to work 25 years, not minimum wage, average wage job, just to put a down payment down in Toronto. And I think it was 19 years or 20 years in Vancouver to put a down payment on a place. Just you get where I'm saying here, right? So this is a big problem. Highly leveraged households in Australia have reached the problem levels as poor housing affordability combined with overextensions of household debt create a tipping point with an extra ingredient. Who would create the perfect storm of a recession according to the new report on Oxford Economics? I think Oxford Economics are watching my videos. I don't want to seem... I keep calling it a perfect storm, an economic perfect storm, an economic housing disaster perfect storm. I love it. I love it. I love it. The research investigates the probability of the housing market in several advanced economies around the world will just slow, as many already have, but experience a correction deep enough to continue recession risk. Over the last 5 decades, sharp housing price corrections, negative year-on-year house price growth rates have been followed by recessions. Senior economist at Oxford Economist Tamara Basic-Vajilovic said. Miss Vajilovic said 3 ingredients in a severe downturn. The overextension on household debt. So people using their homes as an ATM machine, we've been discussing here for years. And it goes on to say low housing affordability and rising mortgage rates played a larger role in influencing the broader economy in such an environment of tipping points were easily breached. Tipping points. I keep talking about tipping. It started to tip in Portland, started tipping in Los Angeles. Oh my God. But desperate leverage and poor affordability being worryingly high in some countries, current debt dynamics were encouraging and mortgage rates were expected to remain low. So it's tough to keep mortgage rates low. Interest rates low because it's your only tool to hedge against inflation, unless they start destroying money. Like once people pay off their bills or they pay off their debts, all the money gets destroyed, or they start destroying money somehow, and monitoring how much money is out there, then they could hedge against the inflation. There's several ways to do it, but that's a very tricky and difficult way to do it. After almost 2 years of falling prices between 10 and 15% in Sydney and Melbourne, the housing market is showing signs of bouncing back with the help of 2 cash rate cuts to record low of 1% and 3 of the big 4 banks expecting another rate cut in October to 0.75%. I think Australia and the Commonwealth will be the first country to go into negative interest rates. They're already discussing to remove cash from the system so they could create a digital... I've covered this many times, guys. Digital-only currency, abolish cash, right? In tandem, in Australia, Prudential Regulation Authority loosened their restriction that had required banks to assess all borrowers against their capacity to repay the loan at 7%. The market has started to react, and already competition has noticeably increased among the among home buyers in some areas have started to rise. Westpac recently cut popular loans by 130 basis points to some of the lowest rates since its records began almost 50 years ago. Given the largest and systematically most important countries within the sample named, the US and Germany were stable given modest household leverage and housing affordability. It was likely a global house price correction that would avoid, the report concluded. Australia was one of the countries named in the report as having a worrying housing debt levels, along with New Zealand, Sweden, and Canada. That's worth theoretically raising alarm bells. So here it is, housing debt to GDP. I covered this about a year ago. The average Australian GDP family in GDP of each family, and completely house broke. And the people that are couch surfing are even worse off because they don't have equity in a house to tap into to eat. So people that do own property and then riding off the coattails of their property increases have been eating well until prices started dropping, and it's getting tougher to pay back these loans, right? Rising household indebtedness has been an important factor in the housing price corrections over the past 5 decades. Most of the countries we consider have undergone significant deleveraging processes since the GFC. Had household debt to GDP ratios have continued to rise in some of them, most notably Australia, she said. The dynamics, however, are favorable. All 4 countries, Australia, New Zealand, Sweden, and Canada, have seen household lending slow, and Australia, in effect, deleveraging even it from the extremely high levels. Its house prices are already reacting accordingly, she acted. So here are some pinpointed areas here that you see. There's 2014 right there, 2009, of course, 90 to 93, and if you see 80 to 84, so you see a bit of it, and of course 1975. This is when things started to get better after right here for a long time. The ratio to household debt disposable income is about 190% according to the Reserve Bank calculations. We got 210%, so for every dollar everybody makes, they have to pay back $2 and something. So it's actually pretty bad. Compared to 70% at the beginning of the 1990s, that then rose 160% to the ultimate GS. So here it is here in the 90s here. Things were pretty stable there if you look at that graph. Broadly speaking, Mrs. Basic said house prices across advanced economies were likely to gain support from dwindling supply as construction slipped and low mortgage rates, which are likely to remain on a long-term trend. So guys, I need to go to my channel here and plug it. You know why? Because I've been talking about you guys down under for so many years. So you go to my channel here, I got Mike in the Night, Trends in the Housing Market, all kinds of good programming for you guys. Click over here, search, just type in Sydney, never mind Australia. You get so much from Sydney all over the place. Watch this. You type in Sydney, boom. Boom. I made that one. Sydney, man down 7.6 million. 10 reasons why I'm leaving Sydney. Sydney man leaves to Australia. Sydney pre-built condo crash urgent. Sydney hidden home, Sydney condo crash, Melbourne housing ripoff, Sydney housing have further to fall, but some of them go back way many years here. Let's see what hasn't been deleted, because they've gotten rid of videos from 2, 3, 4 years ago, and I wasn't being like cross or anything, or being there's that one's popular. 2 years, okay, we got some here like way back. We got some right here. We got some going back. Get out of Sydney. Overvalued Sydney houses prices over by 50%. Vancouver versus Sydney housing crisis must watch. But yeah, guys, I've been doing this for ages, guys, and it's not normal. When it's 4 times your annual income, stay away from it. Stay far away from it. Do not look at anything, because it's just going to further indebt you. And then, I can live off the equity for 5 years like these people. Well, not anymore. Why? Because first-time homebuyers are getting in the market. Housing slowdown is slowing down. Why? Because first-time homebuyers are not jumping into the market. You're not getting the fresh blood that it needs. Sydney could go down to -3, -5% interest rate into negative territory, and it still won't fix their problem. It still won't fix what's the problem. I made a video a year ago saying if Australia went to 0% interest rates, about 8 months ago, if Australia went to 0% interest rates, they still couldn't get themselves out of this mess at 0%. Same thing with Toronto. Same thing with London. Same thing with Vancouver. Same thing with Melbourne. Same thing with Auckland. Same thing with everywhere. So, it's everywhere is the same thing. Any English-speaking country that has a free market, come in and buy us out, and competing for rich investors, countries like Australia, UK. UK started it first. UK started this racket where they were competing for rich investors. Now they're 2-3 years in month over quarter over quarter declines in the UK. London's been abused and used, and a lot of people got fed up of the changes in London, and they moved to Middle England. That's how bad it got. People got fed up in Sydney and moved to Tasmania, Hobart. People got fed up in Vancouver, like myself, and we moved to cities like Merritt and towns. Let me know what you guys think in the comments below. Don't forget to support me on Patreon with $1 a month. Buys me a coffee. It's sitting over there. Coffee's sitting over there. Let me know what you guys think. Thanks for watching, and don't forget to hit the subscribe button.